Are Nvidia's biggest growth dates behind the company? Can you continue to hold shares and outperform the broader markets? Can you step in here and buy more Nvidia shares and continue to outperform the market like this stock has been doing? We'll talk about that in the context of the Q3 earnings coming out from Nvidia after the bell. We'll go through all the numbers, some important trends, and obviously the technical chart pattern as well. What is going on, investors? Hopefully you guys are doing well out there. Finally going to talk about Nvidia, the company, the last of the mega cap companies to report those earnings. They came out after the bell. Q3 numbers coming in at just 205% year over year or revenue growth. That beat expectations by about $2 billion. And this company for the last year or so has just been beating expectations time and time again. Year to date, shares are up 250%. Over the past year, up 230%. Can we keep the good times rolling as it relates to that type of performance? Now, let's take a look at Q3. $18.12 billion. The midpoint estimate was for $16.1 billion. The high end was for $17.5 billion. So look at $18 billion coming like more than $500 million higher than even the high end estimate. That is a good sign. Also a good sign, we got Q4 guidance from Nvidia coming in at $20 billion, plus or minus another 2%. Now, high-end estimate was right at about $20.1 billion, $20.8 billion, excuse me. Midpoint was for 17.8. So you're going to see over the next, look, this week is a holiday weekend. Hopefully you all have a great Thanksgiving. But next week, you'll see a lot of analysts kind of get back into the office, and they're going to have to revise up for Q4. You're going to have to revise up for Q1 because this company, again, is guiding for $20 billion in Q4. And so, look, your Q1 and Q2, in terms of Wall Street estimates, are not even there yet. You do have some analysts expecting $22, $25 billion. That's probably the trajectory that Nvidia is heading down. Now, complicating the situation just a little bit are all those sanctions that the United States government has placed on Nvidia's chips getting shipped into the country of China. And they started with some regulation last year, right around October, I believe. They came back and revised those rules. Now, Nvidia is responding by coming out with more and more chips, modified chips, if you will, that can be shipped into China. But obviously, the White House and the government can kind of maybe stay one step ahead or be maybe a half step behind is probably a way to say it in terms of Nvidia making those sales. Now, we got some pretty good explanation from management saying that in terms of their data center, which is about $14.5 billion of the $18 billion worth of revenue, about 20 to 25% of that revenue comes from China, and they're expecting this to decline significantly. I would guess you're probably moving into kind of the single digits in terms of revenue from data center coming from China. However, given the guidance that the company gave at $20 billion, again, Wall Street was expecting 17.5, high-end Wall Street estimates for 20.8. My guess is almost all of this demand that you're seeing in China, it's going to be sucked up into other countries, primarily here in the United States. You look at something like OpenAI, minus all the drama, well, they had to start cutting off people from signing up from their popular ChatGPT Plus, primarily because they don't have the compute power, right? They don't have enough of these computer chips to offer a compelling product. Not only that, they need to train their next model, ChatGPT 5 or whatever model number they want to call it. Well, you have to continue to progress things along. And then obviously you have a plethora of other startups out there that are trying to get their hands on NVIDIA's GPU. So in the short term, NVIDIA should be able to replace dollar for dollar any China dollars that move out of the company's sales as it relates to the White House sanctions that they put on. And again, this is a sanction directly from the White House. It's not something that was passed through Congress, wasn't something that was up for debate on the House floor or the Senate floor. This was passed directly through the president. So your elections certainly do have consequences as it relates to the investments that you make. Now, data center revenue in the most recent quarter coming in at 14.5. I mean, look at this. Look at this. Last year, it was $3.8 billion. Okay. Even just 3 quarters ago, it was 3.6. In Q1, it was 4.2. And so you've just had this massive acceleration. And so this massive pull forward. And so what some investors are going to start to be maybe a little concerned about is as you start to pull forward this amount of demand. Eventually, it starts to absolutely start to flatten out. Now, we haven't seen any evidence of that. You're up 40% quarter over quarter, let alone year over year. You're up just gigantic amount of percentage there in terms of revenue. However, you should see, as we head into 2024, it will be fiscal 2025 for Nvidia, you will see this start to flatten out. And then eventually, just due to the nature of this product, you're buying these really expensive GPUs and you're going to use them for several years. It's not like you're going to use this chip for a year and then turn. It's not like a cell phone or maybe some other computer products where you're replacing this rather regularly. You're buying these chips and you are going to hold on to them. So there's going to be some concern, and not right this second, but as we head into next year, 2024, fiscal 2025 for Nvidia, you are going to have analysts and probably pundits on TV start to talk about the fact that this data center revenue is likely going to flatten out. You could see further sanctions from the United States government make it to where all the data center traffic to China goes away, and then your customers here in the US, eventually they start to tap out, right? They're like, I have enough GPUs. I have enough compute power. Like I don't need any more. I think that's probably a late 2024 thing, maybe first quarter all the way into 2025. We're looking forward here, but that's what the stock market does, right? Okay, this stock ran immediately all the way back here in April. You basically gapped up into this like $400 or $500 range many months ago on these revenues that were considerably less, because Nvidia did a very nice job telegraphing the next several quarters. And so what you're going to have heading into next year is a debate with Nvidia. Obviously, this growth is going to continue. It is going to slow down. But what does 2025 start to look like? Are you going to have the Microsofts, the Amazons, the Googles, and all the other startups out there start to tap out on demand and say, we've got enough of these chips. They're running enough of the inference and the training sets that they need with these chips. They don't need any more. I'm not exactly sure. I actually think that's probably doubtful. I think those discussions are going to come in, and that is likely going to keep a lid a little bit on Nvidia's stock price. And so something that we talked about off the jump was obviously this stock has outperformed. Look, this stock has consistently outperformed on any time frame. So I wouldn't blame anybody to continue to hold their shares or continue to inch into this stock or want to gain exposure to it. If we start to look out for the next year or so, are we going to have 200%, 100% type of growth in this name? Seems to me it's going to be a little more challenging, certainly, than it has been off the low base that we came off of with Nvidia. And look, we were on a low base. Last year, this company had net income of just $601 million. That's right. This company was operating at near break even this time last year. Now you had operating income at $10.4 billion. Look at the 9-month trend. Last year, you had just $3 billion over 9 months, meaning this company was printing about $1 billion in operating income per quarter. Now you're at $19 billion. So they are growing into that valuation, and the valuation is not overly egregious. Okay, 45 times. I bet if you rework the numbers and the estimates, you're probably kind of like in a low 30s type of PE on this one. So you're not actually paying a huge multiple. And if you believe that this data center revenue, first of all, you have to believe that the China demand or the China situation, first of all, it could get better. But number two, you have other companies kind of step in there from a demand perspective. If you believe that and you believe this number is just going to continue to chug higher and higher, well, obviously, you've got a stock that's actually not that wildly overvalued. Gross profit coming in at 13.4 off that $18.1 billion. Look at your research and development, barely spending any more money. $2 billion last year, 2.3, selling general administrative. I could be like the lone sales agent at Nvidia and they would put $20 billion in operating profit or revenue next quarter because the product sells itself. So that's great for Nvidia, obviously. From a balance sheet perspective, obviously they're loading up. Look at this, from $23 billion up to $32 billion. They're just printing cash over here at Nvidia. They've chipped down their long-term debt. We'll see that when we get here to cash flow statement. You're pulling down, again, a very impressive net income number, $9.3 billion this year. Last year, this company was not really making any money. It was just marginally profitable. Look at your net cash provided by your operating activities, $400 million all the way up to $7.3 billion. You're buying back stock at these elevated levels. Is that the best choice for Nvidia to buy back the stock right now, or just let this $3.8 billion sit in the bank, collect 5% on your treasuries, and maybe go out there and make some acquisitions. Because like we said, I believe Nvidia, when you look at Nvidia's growth rate, it's in the 100, 200% right now. But you start to look out to 2025, I don't think anyone's going to argue that the growth rate at this company is going to slip back into the mid-teens. Doesn't mean the stock is going to fall off the map by any means, but is there a way to reaccelerate this growth rate, keep it in the 20s, keep it up to 30s? One way to do that is through certain types of acquisitions. And look, the company still has plenty of money in order to do something like that. But look, $3.8 billion when your stock is at an all-time high in terms of buyback, I don't know if that's the best use of cash. We'll certainly see going forward with Nvidia. But printing still, even buying back the stock, printing large amounts of cash to their balance sheet. And again, this company just has a boatload more current assets, and certainly from just a straight cash perspective, they've got a lot more than they did last year. So very impressive what their company is doing. And even if they run into some growth rate, which I think most people will agree, even when they run into kind of a slowing growth rate, they're going to have plenty of cash there to do some things. Now, from a technical perspective, this stock has been trading sideways really since June. You're bottoming at 405. The buyers are stepping in at 405, but the sellers are absolutely stepping in at $500 on the nose on this one. People are stepping in and taking profit at those levels. And if investors are not pushing this one to a new level after the $20 billion revenue guidance, which again is well above expectations and more or less above kind of the high-end estimates for Nvidia, I'm not exactly sure what would push this one even higher going forward. And so there's our discussion. Is this stock going to outperform the broader markets going forward? I certainly don't think it's going to vastly underperform. So you certainly can continue to hold your shares. With all the shakeup that you're seeing with OpenAI, you start to see a splintering of the companies. It could actually accelerate the demand for more and more NVIDIA chips. As OpenAI was kind of the centerpiece of the AI world, you get that to start to splinter out. Well, more and more startups might be able to feel like they can come in and take some market share. And so it could reaccelerate the demand. And look, I don't want to reaccelerate's probably not the word, but you have to understand this pull forward of demand for NVIDIA. That is going to start to show its head as we get into late next year. We're talking the Q3, Q4 of 2024. And certainly by the Q1 of 2025, you're going to have these discussions like, is there much more demand than already has shown up for these data center chips? That is certainly up for debate. The stock is still one of the premier stocks, in my opinion, to own. I probably would encourage most investors, if you're not already in Nvidia, a more diversified offering could be found in, there's several ETFs. The one I tend to focus on is the SMH. This one looks absolutely sensational from a technical perspective. You've just broken to new highs. Pullbacks in this one can absolutely be purchased. Folks, that was Nvidia's Q3 earnings, and that puts a wrap really on mega cap tech for Q3. It was an interesting quarter, and we'll certainly see the rest of the year play out with these stocks. Hopefully you all have a wonderful holiday weekend. Happy Thanksgiving, and we'll see you again on Friday. Good luck with your investments.